Hello, everyone. I'm Seth Goldfarb, the facilitator of the Content Production Core Unit. Here today for the ninth edition of Ask MakerDAO. Today we're going to be discussing a proposal to implement fixed-rate DAI loans from Pairwyse. MakerDAO currently has 3 proposals to implement fixed-rate loans. Today we have Akiva Dabrowski and Ashwin Toom of Akiva Capital, if I'm correct. Cool. Yeah, they're here to talk about Pairwyse. So they're gonna start off by giving a little presentation explaining their proposal in more detail, and then we'll open up the floor to questions. I guess I should ask, do you guys mind if guests interrupt to ask questions, or would you prefer if they hold them until you're done with the presentation?
We could take a few breaks in between our talk, like every 5-10 minutes, take a quick stop and stop for questions, and then keep going.
Cool. Yeah, that sounds good. All right. Well, yeah. Unless there's nothing anybody else wants to add, I'll kick it over to you guys.
Awesome. So let me introduce myself real quick and my team. A little bit about myself. I've been really fascinated by MakerDAO for a very long time, probably all the way back to 2015 when I first found out about it. And I've been very committed to doing what I can to help it succeed. And that's why I've done things like join the Open Market Committee and some other committees that involved in that are part of MakerDAO to really put us on the right track to success. What I saw really in 2018 was that we did have some concerns about how Maker would handle what's known in academic economics as the impossible trinity. So just to sum up, I mean, what that theory states is that it's very difficult to control if you have if you try to get a fixed peg of currency exchange rate, sovereign interest rate policy, and lack of capital controls. And this is something we've tried to bring up on the forums, and we've got some very interesting responses out of people like MakerMan, for example, has been very active talking about how impossible trinity is a very material challenge for Maker to address. And what we believe is actually the solution to the impossible trinity for Maker to really be able to have control over the currency and the currency exchange rate and the interest rate is to really control for maturity. So right now, MakerDAO, everything is overnight. You do your Ether vaults and everything's pretty much per the second. The interest rate's being calculated as the seconds go by. And what we envision is that what can happen is that MakerDAO, just like a bank would, have a bunch of maturities and tenors for its clients and manage the assets and liabilities that way. So that's why we propose a solution for providing fixed rates, and not only fixed rates, fixed terms, and that's really, those two really go together. And by providing fixed rate and fixed terms, we can do a lot of great things. One, we can maintain the stability of DAI over a longer term. We can maintain DAI as a decentralized product. We can provide better guarantees to the clients of MakerDAO because they don't have to worry about the changing interest rates. And we can also do all of that and have some really good sound policy, which can really build a great DeFi all around us. I'll tell you a little bit about my own background. I got started actually in crypto when I helped the Ethereum Foundation with their post-ICO financing, just a very small deal between them and a Toronto venture capitalist called XDL Capital. I worked for that venture capital group and grew my investor network that way. And later I worked with Ashwin at KPMG. Ashwin's my business partner who's on the line right now. And we worked together at KPMG on a variety of audit and blockchain projects. I'm going to tell you a bit about Ashwin because he's pretty modest. Ashwin was the founding member of the R&D team at what became India's largest startup called Paytm. So he was head of Paytm Labs. Ashwin was also head of data at Scotiabank, one of the largest Canadian banks. And Ashwin was head of our team at KPMG. We provide a solution that can make DAI very attractive to corporate treasuries. One thing that makes me very excited about DAI is that right now we're living in a world where the central banks have kept the interest rates so low that short-term people who want to invest cash for the short term can't get a lot of options. And I think what's really great about DAI is that it can be a competitive product to go and offer to corporate treasuries. And what I see happening is growing a network of MakerDAO's clients where we can see a variety of corporate treasuries all across the world, anywhere from Latin America to Asia, using DAI as their product. And what we think is that we can fix that interest rate and make it an even more attractive product to make Maker even more successful, and simultaneously, to make it even better, get a fixed interest rate for MakerDAO's vault users. Now, I don't want to go too much into the mechanics of how we engineer all this. We did open up our GitHub earlier today, so if you go to the forums and you look at our page there, you can take a look at our GitHub. A little bit about the project. We recently raised a very substantial seed round, partnered with Saxon Advisors, a UK-based investment bank. Another member of our team is who helped us with it is Avtar Sahra, who's the president of Navora, a very large blockchain company which recently did a $9 billion deal with a few banks issuing commercial paper. We also have partnerships with various law firms and development teams all across the world. Our developers are CID, Considerate Dime Technologies, and we have a partnership with the law firm Seward and Kissel, which is a major asset management and financial services law firm. We are very committed to collaborating together with MakerDAO. For example, I've been in contact with the MakerDAO business development team all the way back to when it was in the foundation and all the way back to 2019. Actually, in 2019, I flew around the world meeting different Maker business development executives just so I could get a sense for where the DAI market was. And I actually went from New York to Argentina to get a sense of where MakerDAO was heading in the business development front. And we're committed to working with MakerDAO's core units to really promote the use of fixed rate products and to help grow the ecosystem. We're also developing some newer products which will be announced later next year. We like the motto "Code is law," and we like to develop products around the idea that code is law. And that's not only in the financial sense, and we want to develop more derivative products which can be used all across DeFi, where the derivative contract being settled is done on chain, and that's what we mean by code is law. I'm gonna, in a couple minutes, I'm gonna hand it off to Ashwin real quick to show you our mainnet demo. We have deployed contracts on mainnet with our front end. We're gonna show you what that all looks like. Last piece I'll say is that we do own some intellectual property around using smart contracts to facilitate floating to fix on Maker vaults. And it was already granted in Japan, and we're pursuing it in other countries as well. So Ashwin, I'll hand it over to you to show a quick demo of the platform.
Excellent. Thanks, everyone. Great to see everyone and share with you what we've done. I'm going to share my full screen so you can kind of see the full demo. If folks have issue, everyone can see the screen? All right. So, let me just pull this down here. And so I'm going to walk you through the mainnet demo. What might be helpful is maybe just getting a visual of what's happening behind the scenes. So we have our white paper, and you can find it on our GitHub pages. And I'm going to just show you a schematic of like our smart contract system. It's a very simple, elegant solution to a problem that I think we can help solve, which is how do you provide fixed rates as well as guarantees on a loan agreement, all kind of within the same smart contract. And so what we developed was a smart contract system where we built on top of MakerDAO, and we essentially tied together a MakerDAO's CDP vault credit facilities with the DAI DSR, which represents lender escrow. And so what our smart contract does is brings borrowers and lenders into a peer-to-peer agreement where when the borrower locks in a collateral and requests a DAI loan, a lender can match the equivalent principal, which goes into a DSR. And what the smart contract does is constant continuous rate balancing. As MakerDAO rates fluctuate, we have a system set up to update the contract and mediate cash flows between borrower and lender, so that if the interest rate goes high above the fixed rate, then we mediate cash flow one way, and then if the DSR dips below the fixed rate, then we mediate a cash flow from the lender, borrower to the lender. So it's in this manner that we are able to produce a fixed rate that both borrower and the lender can enjoy for the duration of the loan. And we can talk later on about how this is actually scalable in many ways, especially with respect to the impossible trinity. What I'll show you first is just give you a walkthrough of our user interface that we've built. We built a very simple UI that will, we have a roadmap to evolve over the next few months as we gather more and more transactions on the platform. So it's a full Web3 app, and you can log in with your wallet of choice. And I'm gonna, and within the MakerDAO protocol, we're within the Pairwyse protocol. There's essentially three participants. It's the borrower, the lender, and the administrator, which is the DAO that we're seeding around the protocol. And so I'm going to log in as the borrower just to give a quick tour of our mainnet protocol. Actually, I need to join the Covan to mainnet. 1 minute to refresh that. Excellent. So we already have some capital deployed. These are just like test deals to kind of stress test the protocol. In addition to a front end and a smart contract system, we also have a back end that not only triggers the cash mediation. We also have an Oracle system that is listening to collateral valuations based on MakerDAO's Oracle feeds, and with that complementary risk engine that will notify users if their vaults or their deals may be at liquidation risk or call risk. And if I click on any one of these deals, so I'll click on an active deal that we have on the platform. Sorry, the JavaScript takes a while to load here. So let me just see if I can remove this panel there. And I'll just make this a little smaller here so you can all see. So you just click on here. And what you see here is basically the details of an agreement contract. So, and if anyone has questions on the technical implementation, happy to walk through. But the agreement contract, essentially has a dedicated address, in Ethereum address. What you have is the borrower address and the lender address. Along with the details of the fixed rate agreement, which is the fixed rate that the borrower has proposed to the lender and that the lender has agreed to match, and a description of the collateral and type and the amount, along with how much of a DAI principal the borrower is requesting in this fixed rate agreement. Along with the general vault information, which includes the stability fee and the risk premium associated with the collateral. We also, provide information on the vault state, and we're constantly monitoring vault states, on behalf of participants to ensure that the vaults are at adequate collateralization ratio, and as well as we track internal balances in terms of the cash flows that we manage between borrower and escrow accounts that manage the fixed rates. On top of the agreement details, we also are keeping track of the update history. This includes all key transactions from the onboarding of the borrower and the onboarding of a lender to the agreement, as well as the cash flows that happen in response to interest rate changes. If you click on any of these transactions, it'll just take you to Etherscan, where you can inspect the more granular details of the transaction involved and as well as you can see exactly what the smart contracts are doing with within the transaction. So I'll go back here, and if anyone has any questions, feel free to ask away. And what I'll show you here is we kept it very simple. So I'm logged in as a borrower, and actually what I'll do is maybe if we have time, I'll take you into a demo on our Covan test app, because then I can show you the full life cycle that happens. And maybe what I'll show you is just a quick visual of what that life cycle looks like throughout a term loan. You can read this in our white paper, but essentially, so what happens is, a borrower, the FRA begins with a borrower creating and posting a pending deal to the platform. So the borrower will create an FRA. They will onboard their collateral assets to that fixed rate agreement. And once they've signed off on that transaction, it will be posted in the protocol, and the protocol has an automated management system to automatically either approve or reject the proposed loan based on your basic principles of making sure there's the right collateralization ratio, and we're above dust limits and things like that. And then upon approval of the FRA, the agreement will then be added to change in status from pending agreement to an open agreement. And what that does is makes that agreement available now to a marketplace of DAI investors. So these are investors from corporate treasuries to folks who are looking for fixed income products with very low risk. Low risk meaning while they would like to get some kind of yield in return, they're willing to sacrifice a lower interest rate in return for principal protection. And because we've set up the FRAs to manage both the borrower and lender escrows, we're able to, because we lock the lender DAI in a DSR within the FRA, we're able to guarantee that the principal will remain intact in the event of a credit default from the borrower. And so once that deal is posted to the marketplace, a lender can scan over various deals and then accept it and match the principal. Once it's matched, then it's the DAI loan is unlocked. The vault is then, the escrows are then locked within the contract. And then what we produce, the protocol produces a continuous FRA swap along with active monitoring to ensure that there is a fixed rate during the full tenor of the loan, as well as making sure those loans are safe from a collateral ratio perspective. And once the term loan closes, the vault is transferred back to the borrower, and the DAI is returned, the DSR is returned to the lender, and so that they get their principal as well as their fixed income at the end of the term. And so I can do some sample transactions on the platform just to show you how it works. So I'm going to just log into our Covan testnet here.
Hey, Ashwin, we did have a question in the chat.
Sure.
Do you want to jump on mic and ask your question? Or? I can read it otherwise.
Sure.
You might have addressed it during here. I'm actually curious about this too. So is fixed rate borrowing limited to lender deposit availability, or is the idea that Maker can just be that with some sort of direct deposit module?
Yeah, so I can answer that. We do require a counterparty for the deal because we think it's necessary for there to be a matched book where for every liability there's an asset, and for every asset there's the liability there. So that's how we see it. At the same time, we do think that a lot of DAI users are interested in this product. So it kind of is a natural fit to just sell these contracts into what already exists amongst the DAI user base. And not only that, but into a future and large DAI user base.
Okay, gotcha. That makes sense. Well, I guess, is there a reason you chose to make this a borrower-driven system?
I mean, a lot of it is just, like some principles of just capital markets where like floating rates and fixed rates, like there's no free lunches. So there's no free lunch. So when you have floating liabilities and floating assets, you need to match them. And we think that's the correct way to do it.
Okay, I understand. Cool. Thank you for clarifying.
Yeah, no problem.
I think the main question was, like, why is it a peer that needs to match the liability instead of the Maker protocol itself? And I guess, like, in thinking through that question myself, I understand, like, if Maker does like a direct deposit module and just acts as the unlimited counterparty for this sort of fixed rate product, then that DAI that it's providing technically is unbacked unless the protocol uses the surplus buffer DAI, at which point it would be pretty much the same as any other peer that can interact with the system, is my understanding. So that's kind of my reasoning for why I think, like, it has to be the borrower and not Maker to do it. But if Maker were to do it, they could, we could do it with DAI that's in the surplus, basically. But anyway, yeah, just thinking out loud.
That is true. We could potentially do it, but I'm not sure if this is still the case. But at one point, the DAI in the surplus buffer wasn't earning DSR. So it's when it like, in order for this kind of deal to work, the DAI has to be earning DSR, and from what I understand, the DAI in the surplus buffer doesn't earn DSR, at least at one point.
Okay, if there's any other questions, I put this visual up to kind of show why a matchbook is important, and to kind of speak to Akiva's point. Really what you want with a fixed rate solution is a solution that can scale with the existing DAI supply, rather than have inflation pressures kind of build up because there was an unmatched book, or liabilities and assets were not matched, or investments versus lending were mismatched. So we touched on a lot of that in a white paper, so happy to answer further questions on that. I think what really it comes down to is Maker really it has solved the issue of a reliable decentralized stable coin, and but in order to provide fixed rates, it could basically if MakerDAO were to do this without the aid of some other kind of like peer channel, like DAI investors, then they would essentially sacrifice the ability to reliably peg the DAI. And so what we do is we build on top of DeFi protocols, and we built on top of Maker, so that we access the free market of borrowers and investors who are using MakerDAO, and then direct them into peer-to-peer agreements that induce fixed rates. But then with MakerDAO backing these loans, generate revenue in the form of risk premiums for the MakerDAO protocol. So it's really complementary to what MakerDAO solves, and it really solves what markets really want, which is a stable coin that's decentralized, that has fixed income as well as fixed rates for financing. And I can do a little bit more in the demo just to show you actual transaction and how an agreement is created. So this is our Covan testnet, and our development team has been really stress testing the protocol. Like I mentioned before, you'll have on the platform deals that are in various states of onboarding, and the active deals are the ones where the terms are active, and we've made it pretty easy right now to create an FRA. So the borrower would log in, hit the create button. They would choose a collateral type. We can, for the time being, in test mode, we have just a few collateral types like Ether and the Uni LP types, but it's very easy to activate all collateral types on our platform. Any collateral type that MakerDAO accepts within their CDP vaults, we'll have active in our system, and that includes RWA as well as all the digital assets that Maker supports this collateral. So when a borrower is creating a deal, they would, essentially they would specify how much collateral they want to deposit. So I'm just going to put 3 ETH here, and I'm just going to take out DAI debt of 2,000 as a demo. They'll specify what fixed rate they want to offer the lender. So I'll say 4%. And for the purpose of this demo, I'll just set the expiration date to 1 day. But the tenors can be infinite. And the idea is that the borrower will what Pairwyse is, it's going to evolve into an active marketplace. So borrowers will take the knowledge of and of what they've seen in the marketplace and try to post competitive deals. And posting a deal is as simple as a wallet transaction. And so while confirming, we can view the transaction details and just keep track of those while they're updating. And so what this is doing is now that the borrower has signed off, it's the borrower has given the protocol authority to transfer the collateral to the agreement contract. And once that transaction goes through, we can see that now a new pending deal has been posted, and we can see the details of that pending deal. The reason we put an approval step in the protocol, it's automated on on our mainnet system and manual here. But what we want to avoid are spam deals that appear on the platform. And so we do have a backend engine that has some rule sets. And the main thing we want to see is that there's a safe collateralization ratio, and that the principal is and the cash flows will be above the dust limit, so we don't run into technical issues in managing the loan. And so that's what a borrower does, and a borrower has the ability to add more collateral. And then once the loan has been matched by a lender, the borrower can withdraw the loan principal or the loan proceeds, and the loan becomes active. So, and if anyone has any questions, feel free to ask. And otherwise, what I'll do is I'll just show you what the transaction looks like from the lender side.
Yeah, we do actually have a few questions
great.
in the chat. Yeah, David, I could read yours again, or if you want to jump on the mic, either way.
Yeah, I think I could jump on now. The neighbor is a little quieter now. So I had 2 questions. So the first one I'll ask, and then Paper had one, and then we can answer my other one after Papers. So has your team looked at the Deco protocol solution or the term lending module solutions? And I'm curious if you have any views on those approaches and maybe insights into how Pairwyse is different fundamentally from those.
There's not so much we can say about other protocols. We're really limited on what we could say. I think it's good. I think in general, it's good to have a vibrant ecosystem around Maker. Like it's good for Maker to have a lot of different proposals. I think that's great. But we can't say much else. I think we should go to your other question. That one I think I could answer better.
Yeah, fair enough. In that case, I'm going to give it to Paper, and then we could answer the question that I put in last.
Okay, so I'll read Paper's question. Give everyone the rundown of your regulatory situation and to confirm Maker's interaction here is as a lender, not borrower. Yeah, that's correct. So the key thing is that the points where we're interacting with Maker in Pairwyse smart contracts, those are the same touch points that any other client of Maker would use. So the regulation of Maker, from as far as I can tell, I'm not a lawyer, but from my research of talking to lawyers, is that it wouldn't be any different from Maker in general, from Maker's perspective. How much is Maker actually lending versus the peer providing? Yeah, I mean, yeah, just to give you a clearer view of our regulatory situation, we have partnerships with regulated investment banks, and what we plan on doing is using our network of investment banks to use their and to and to sort of do it in a compliant way. So we're not gonna go against securities law. But just to give you a clear picture, I mean, I think it could be perceived in different ways from a regulation. We don't have all the insights into how regulators will perceive it, but at the same time, I think it is a very light touch regulation, and we can rely on our partnerships to generate partnerships to bootstrap ourselves up for the next while.
Yeah, if I can say something on the first question, we did address different approaches to fixed rate provision in our white paper, and you can kind of read just the introduction of our white paper, and we go through where we see Pairwyse in terms of not just fitting fixed rate provision, but the way we approach fixed rate provision through a composable design really allows us to go, into kind of like a broader realm of, derivative contracts that would essentially help bridge the existing DeFi space with legacy capital markets. So the composable design is one innovation, that we brought to market, and we kind of describe here in this section the different approaches to fixed rate provisions. And so invite you to read this section, and happy to also hear your feedback on this, as well as counterpoints, to our approach. And in terms of the second question, in our white paper, we also talk about the regulated side of it. So happy to kind of point you to specific sections, but as Akiva mentioned, it's really providing the right kinds of whitelisted on ramps and off ramps from DAI and from Ethereum in general, so that corporate treasuries who are kind of in the legacy world, as well as real world financiers who are building assets in the real world, they can do so safely from the jurisdictions that they reside in. And so there's more than just a smart contract system. There's also, we've kind of taken an ecosystem level approach to providing a fixed rate solution.
Yeah, we have some more questions. So from David, let's see here.
Yeah. Oh yeah. So actually, so I'm just listing questions as they come to me, but I'm curious to get one of my questions answered that wasn't, which was the one here. So it's kind of like a user experience question, because I realize that when somebody creates an FRA, they have to kind of wait for the system to either match them or for another peer to be like, okay, this is acceptable. So I'm curious, is there a range of parameters at a given time in which the FRA is created where it instantly gets fulfilled, where there isn't that like waiting period for it to get picked up? Maybe based on like, I don't know. Basically, I'm just seeing if there's ever a case where it's instant and there's no waiting time.
Yeah, so we obviously want to minimize the waiting time. So, the way we see it is we think of it as a primary market transaction where prior to anybody actually posting anything on our platform, there would already be a sort of sales process where the borrower would already be going around almost like a roadshow, presenting to different investors who are on the fixed income side. And that way they can already come to agreement before they start posting on the platform, just like any other capital markets transaction. And that way, by the time they're posting on the platform, it's already agreed and it can just go in 1 second like that.
Oh, I see. So you see it as almost like an OTC tool.
Yeah, exactly. It's like exactly, yeah.
Yeah, I didn't consider that. That's interesting. That's interesting indeed.
We rely a lot on off-chain discussions where we're not even talking on the blockchain. We're doing a whole presentation for the client, just like on a regular call or in person, and that way we can come to agreement. And then by the time everyone's ready, we don't have to wait for the pending period. It can go very quickly.
Right. Yeah, that makes sense. And then my second question was about how much is Maker actually lending versus the peer providing the DAI for the FRA. So yeah, like I was curious more about like a ratio or a figure. So if somebody borrows 100K through Maker through a Pairwyse FRA, how much of it is freshly generated DAI versus peer DAI?
Yeah, so it would be 100. So it would be 100% freshly generated, and then if let's say there was 100, the vault was 100 DAI, then the way the code is implemented today, we would require 100 DAI on the other side as well. But at the same time, we could reduce that to lower amounts. We want to see at the beginning there's more risk when you reduce it, because then if let's say the DSR goes to like 500%, which probably won't happen, but if it does, we need to be resilient and robust and anti-fragile to that. But if we can be sure that the DSR won't go above like 20% or something, then we could change that and potentially require a lower amount.
Yeah, got it. And I'm also curious, like, because the principal is secured with the peer's DAI in the DSR, does that give us like, I don't know, maybe I don't know what's wrong in my thinking, but I'm imagining that a fixed rate vault through Pairwyse might actually offer a cheaper rate than the floating rate, in contrast to something like Aave's fixed rates, which are typically at a premium. So am I thinking about that right? Is it going to be possible to have cheaper fixed term rates as a result of that additional backing?
I mean, generally, the way we see it is that there is a research like which suggests that when you have a party which is guaranteeing a fixed income deal, that actually reduces the cost of capital. So when Maker has its tremendous $55 million system surplus buffer, and that's backing all the DAI. So by going through that, by doing a deal which is involved with that surplus buffer, we actually reduce the cost of capital in a general sense. In the general sense, the idea is to reduce cost of capital. That's part of why we're pursuing this, because if we want to make Maker really scale and we want to make Maker really huge, we need to offer competitive terms to companies out there in the world. So the idea is to reduce the cost of capital. With that being said, it is dependent on the expectation of the DSR. So it could be higher or lower than the floating rate on Maker, but it should be lower. That's the target.
Right. But isn't the DSR risk on the peer who's providing DAI and not so much on the borrower, the protocol, or even Pairwyse?
Well, from their perspective, from the cash-rich investors' perspective, which is the lender's perspective, they have on the one hand they hold DAI, so they have the risk of the DSR going down. On the other side, they have this FRA, which the risk is the opposite. So the idea is to neutralize everything. So pretty much nobody has any more risk, and everyone just has a nice, safe exposure. That's the idea.
Yeah. Okay. So is the short answer yes to the cheaper fixed term rates question?
Yeah, I think it is. Yeah.
Interesting. Very interesting. Okay. Cool. Thanks.
That's the motivation. Yeah.
Awesome. Thanks for all the questions.
Hey, I joined a little late, but got a question with regards to your product here. Is it fair to say that Pairwyse touches vault and liquidations? In other words, Maker here is going to be two of three, it's taking on 2 of 3 counterparty risk, meaning that Maker's taking on fixed rate lender and treasury risk, and also is the credit support provider. Is that fair to say that?
Well, it's fair to say that Maker is the credit support provider, but that as far as I can see, that generally is the business that Maker is in. Maker makes money by MKR holders guaranteeing the DAI supply. So I think in that sense, it's right. Yeah.
Right, but it's also the fixed rate lender, and it's also your app here. And again, I joined late, like 16 minutes late. It touches both the vaults and the liquidation portions of the Maker protocol.
No, we don't deal with liquidations. The idea is that Maker is a very advanced system for dealing with liquidations. So in terms of the code, the smart contract, which we've released this afternoon, you won't find anything in there about liquidations. All of that is dealt with by Maker, and just to clarify, in terms of our proposal, we're not proposing any code changes to Maker whatsoever. Everything we've built today just fits seamlessly right around Maker, and we don't need to propose any code change to Maker whatsoever. So the users are interacting with Maker in the exact same way that they would as if we had never made this proposal.
Yeah, I think that was one of the questions. Well, Jerry has a different question with regards to auditing the code, but I guess the code was released a little bit late. I think you said like today, right? And is that because it wasn't ready yet? I mean, what was the reason behind releasing both the white paper and the code a little bit, way after you submitted the MIP6 application?
Well, we wanted to make it like a special day, like this is the day we're releasing everything. We're giving a public information, so why not make it a special day?
That's cool. Yeah.
And yeah, and we were audited by IOCIRO. So IOCIRO is a somewhat pretty well known a DeFi audit firm, and they audited our smart contracts. We're going through another audit in the next few weeks. So we're looking at engaging some of the auditors which actually audited MCD. So hopefully we can release some more audit results soon.
Yeah, totally. That makes sense. Thanks, man.
Any more questions anybody wants to ask? Cool. Did you guys
let us know?
Yeah, certainly. I have another question about liquidations. I'm curious, since Frank brought it up, like do liquidations essentially work the same in this context? So if someone creates a fixed rate loan and then their collateral, the value of their collateral drops, does it get liquidated as usual, or do y'all have something in place similar to DeFi Saver to help mitigate that, or how's that handled?
Yeah, it gets liquidated as usual, and what that does in the Pairwyse protocol, it basically triggers the term to end prematurely. So it's basically a call risk, and upon a liquidation event, the FRA is ended, and the escrows are returned to their respective owners. In that scenario, the principal is protected for the lender. Of course, they lose out on the interest income, and of course, the borrower will have to deal with the fact that their vault was liquidated. But that happens seamlessly in our protocol. What I'll say about in terms of the lender risk, because it came up in another question, is essentially what you're looking here in the FRA is the ability, the way we kind of composed, and you can take a look at our code. The reason why composable design is attractive here is because it's really a way of managing multiple competing interests within a capital stack. In this case, it's a three-party deal between the borrower, the lender, and MakerDAO. And the order of priority in terms of who gets what money when, what cash flow, what happens during liquidation, that's all handled within the smart contract in a very composable way. And what that allows us to do over time is now create next generations of FRA contracts where we can start to address things such as insurance or hedging on the lender's interest income, as an example. So this is why we're super excited, because one is the solution can provide an immediate solution for fixed rate provisions on MakerDAO. We're already on Mainnet. We're going through audits, and so this is very much GTM ready. But there's a whole wider future of all kinds of extensible derivatives we can create, even just on top of MakerDAO. So that's what really has us excited.
And I was wondering if, and this probably hasn't been done yet, but have you guys run any kind of numbers as far as like a forecaster of what what kind of cash flow forecast, so to speak, this product can bring? And if you haven't, then maybe you have some thoughts. So I'm saying that simulation, right? Like if you get a TVL of 100 million, 500 million, et cetera.
Yeah, I think Ashwin, you wanted to address that one? I know.
Yeah, actually, yeah. That's our investment banking team, Saxon Advisors in the UK, have actually, done that research. So what they did was they looked at the entire securitization market around the world and actually broke it down country by country. It was actually impressive what they did. And we can make some of that research available as well. We just have to kind of make it consumable for you guys. But what they did was they looked at the entire private financing of securitized assets, and they went from kind of a global view and started like looking at addressable markets in DeFi, and then looking at addressable market that MakerDAO is in a position to capture. And MakerDAO is in a position to capture the majority of it, because I think in terms of real world assets, I think Maker has the first mover advantage over some of the other peer protocols. And from MakerDAO, who our investment bankers did a kind of analysis of, okay, what kind of market could a product like Pairwyse capture, and how would that grow over time? And certainly, in the early stages, it's going to be starting at 7-8 figure test deals. Really, I think we're at the early adopter stage where different securitizers are seeing the potential, and they're working with Maker in different capacities to bring their to securitize and tokenize and bring their collateral into MakerDAO for general financing. And as that's kind of picking up steam, our product is at the right place at the right time, in that you can either create an FRA from scratch, meaning depositing a collateral and creating a vault within the FRA. But by next month, we'll have a feature on Mainnet where you can actually import an existing CDP vault into the FRA. So based on where we see the product developing for Pairwyse, we see a very rich roadmap that goes from, say, a few $1 million worth of deals towards the end of this year and the beginning of next, to in 1 year, 1 billion to 2 billion being actively brought in as TVL on the platform through Pairwyse. And the way Pairwyse is set up, any deals that are made on Pairwyse are concurrently made on MakerDAO. So we kind of both get to enjoy the TVLs.
Very cool. And be good if you can share that with the community on the forum, anything that you have. Pretty sure we could digest it.
Yeah, and I think there really is a lot of unknowns in terms of understanding the markets, right? So I think we've done really well in understanding securitizers and originators, and what we are really lacking is understanding of who would be the potential DAI investors. So one is, what are existing DAI holders actually doing with the DAI that they're purchasing on the open market for investment purposes or what have you? That's one unknown, and of course, we're busy talking with corporate treasuries and folks kind of on the institutional side to really understand what makes them comfortable, even just investing in a stable coin. Forget that it's even decentralized. What would even what would remove the inhibition of even, say, using any of the centralized stable coins as your kind of gateway to the DeFi world? And that's what as much as we're working on the technical side, we're really working on the problems on the business development side, and would love to engage the community at large on how we can understand the market better and how we can create products that will serve their needs.
Very cool. Thank you.
Yeah, that's great to hear. I believe the risk team is doing some research into that. I'll follow up after the call and see if I can find some resources for you guys. David, do you have another question you wanted to ask?
Yeah, I was like thinking through the whole design, and I'm curious, like, for some reason my brain is pointing me towards the conclusion that a DAI depositor in DSR would get a better yield than the Pairwyse FRA DAI peer. And like my reasoning for thinking that is that, all right, like if I'm putting up, let's say 100K, it gets matched on an FRA. All right, so the protocol, let's say this is all ETH, right? ETH. The protocol will mint it on like the cheapest ETH, let's say 3% is your rate, right? and then the DSR guy is offsetting it by like 1%. Actually, I don't know. I'm kind of, it's hard to think this out loud and not like write it down, but I don't know. I feel like I'm wrong, but I also feel like this is kind of a dumb question to try to sort through right now.
Yeah, I can explain it. So a lot of it's dependent on what is the expectation of the DSR over the tenor or maturity. So let's say the DSR right now is at 5%, but all of the market participants believe that it's going down to zero in the next, or that it's very likely that it'll go to zero in the next, say, month. And we're looking at an FRA here for a year, then the fixed rate is going to be lower, but it'll be more stable because you won't have to suffer the uncertainty of whether it'll be high or be low. Whereas if the DSR is at zero and the people think, well, market participants look at it and they say, well, we believe it might be at 5% over the next year, and that's what the maturity is of the FRA. Then you look at that and you say, okay, well, now you have to suffer the uncertainty of whether it's going to be at 0 or 5, or you can just get a fixed rate somewhere in between. That's how we look at it.
Yeah, and if I can add to what Akiva said, if you look at even some of the folks who are coming to MakerDAO and some of the problems and sensitivities they're expressing, you have to kind of think of like folks who kind of have long-term financing needs. So like say like commercial real estate, agricultural financing, infrastructure projects. These are extremely sensitive to interest rate changes. So it's not just getting the best rates or getting in when rates are low and locking it in. It's really about just having a predictable cost of capital, because once there's a predictable cost of capital for financing, that organization cannot have any deviation in terms of managing those costs from any uncertainties that they're facing, especially from potential credit risk. So that's something we're very cognizant of, and that's why we kind of designed the solution, and we envisioned the marketplace, and it will be a marketplace that will adjust its expectations of what would be the rate fluctuation over a period of time, and then borrowers and lenders will essentially negotiate what that fixed rate should be for the loans that they enter into.
Yeah, cool. Yeah, thanks for elaborating a bit on those thoughts. Appreciate it.
Well, we are coming up at the top of the hour here. Ashwin and Akiva, was there anything from the presentation that you didn't get to that you would like to share?
If there's one message to take away from this, is that Ashwin and I are very actively working on growing the DAI user base. We're actively using investor networks to increase the amount of people holding DAI, and at volume and at corporations as well, and all that stuff. So that's what we're doing, and that's what we want you guys to know.
Awesome. Very cool to hear. Do we have any final questions from the audience?
No final, I can't speak for everybody else, but actually a final comment from me. So next week on the 12th, I know Akiva and Ashwin might already know this, but they are invited to an issue discussion call that we are hosting in partnership with Content Production. But we're going to go through the different fixed rate solutions that exist. So there's the TLM that actually was already voted in. Then there's the Deco protocol, which has a core unit informal submission right now. And then there's Pairwyse, which is in the pre-MIP discussion phase. And so I'm going to do my best to summarize Deco, but I'm really excited to have Akiva and Ashwin, or one of you, on that call on Tuesday. And some of the things we're going to be talking about is what MakerDAO is looking for in one of these solutions. Like, what are the ideals? What are the differences? And so I'm going to be spending some time before that call, like doing a lot of homework myself. But yeah, if you found this call interesting, definitely join us or watch the recording of the upcoming call on October 12th.
Looking forward.
Yeah, thank you for the plug, David. Yeah, if there's no other questions, do you guys what's the best way for anybody to get in touch with you if they have questions they want to follow up on?
I'm just going to post my email in the chat here. Akiva@akiva.capital.
Yeah, and feel free to send any of your feedback through any of the forum posts that we've made, or even to this AMA, or hit us, email us up anytime. Happy to discuss one-on-one what we're doing.
Yeah, great, Paul. Thank you for answering questions.
Awesome. Yeah. Ashwin, Akiva, thank you both for being here. Thank you to all the guests for joining.